Good morning. It is the Wall Street Weekly Wrap Up on October 6th, 2024. And we ended the third quarter up 28%. There's nobody better. Look at that. Last year we finished at 33%. Now it's 28 at third quarter. Will we get better than that? We don't know. Even if we get down at the end of the year at 21%, that's a hell of a year. I mean, we're looking at 8% on average on the S&P. Remember, that's our goal, to beat the S&P 500. But we'll get into it. Let's take a look at some of the big news. Oh, my God. NVDA. Jensen Huang said demand for the Blackwell is insane. When's the last time you heard a $3 billion company said, we have so much demand for our product that we can't keep up with it? Why? Because the big four, Amazon and Google and Microsoft and Meta all want the chips. And now you're going to throw in Oracle, who's going to start buying a lot of chips. They want it because they realize how good this is. There's going to be a winner in AI, but it might be just two or three. Just like we have two or three search engines or two or three, big franchise food restaurants and things like that. But it's tough. You got to have the chips. You want to have a good AI, and open AI. They're talking it's going to be $100 million of stuff. They just did a $6 billion fundraising, and wow. So, it's bounced up. Remember, in August, everybody, it's going to go back. It's going to go back down to, its IPO price before it split. Well, I don't think so. It's an inflection now. Is it going to break up or down? Everybody wants to know. China, oh my God. Look at this parabolic mountain. That is too high. But remember, China has been sold for the last 5 years. They have decimated any buyers of the area. S23 Research said $7 billion lost in the China shorts. That's a lot of money. If you go back into the bank bailouts, $25 billion for a bank. This is 1 week they just lost that money. I mean, you got to imagine that's going to be in there. Like I said, we've been in FCL. I call it FLCH, but it's the China fund. And this is a trend line. Holy smokes! Once it gets up here, people are starting to get optimistic. We're almost doubled our money in it. We'll take a look at it. We'll show. We're going to do the analysis of the third quarter because that's important. But let's get into the major indicators. S&P, Nasdaq. Wow, 20%. 3 years. Really 2 years of solid gains, 2.5 years of solid gains in 1 year. That is a remarkable year. Anytime you get double digits, you're doing better than the historical average. The Dow set a new high at 12%. People are like, oh my God, that's not much. I told them, kick out Intel, put NVIDIA 5 years ago. 5 years ago, the Dow would not be at 12%. It would be up there with everybody else. S&P 500, Russell 2. I don't think Tom Lee's going to get 50% up in the Russell 2000. Maybe you could get 18%, but not 50. When we look at the Dow Jones average, holy smokes, that's a nice steady uptrend. Of course, everything with the stock market is choppy. And when you get up here and you break a new high over here and it chops up and then goes up and then goes down, you get sick if you buy the index funds. But now we're at the record highs, and it's a big deal. Dow 40,000. I remember we put the $10,000 the 10,000 Dow hat on, and then it when it collapsed in 2007, we put the $10,000 because it went from 20,000 to 10,000 again, and now you've had 4 times increase on it. I think it's a big deal. Anytime you break a number of 40,000, that's a big deal to me. Next is 50,000, which we'll see in the next few years maybe. Indicators, the 2-year note, man, down below it. Everybody's getting ready. Remember, this was at 5 this summer. Now you're not getting so much money. This allocation of, I always used 110% rule. If you're 50 years old, take it minus, be 60% stocks and 40% in bonds, or something. So you just don't lose it all. Because, in 2007, I watched people literally lose 85% of their money. And yeah, you can go in there, whatever you want, but you got to have something secured. You can't be betting it all. Because remember that chart I showed that we're way above everybody else on the stock market returns? And if it doesn't go up or it flips, That could be an ugly day. Got to have the money. Again, oil, look at this thing. Not in the 60s anymore. Man, I tell you, when Iran launched all those missiles that didn't hit, everybody's getting scared. And they're waiting for the Israel response. Israel hasn't said nothing. Are they going to take out the nuke plant developments? Are they going to take out the drone plants? I mean, nobody knows. And they've killed, seemed like, every major leader in Hezbollah, so it's going to be an issue. Gas, I've had long talks about what's going to be the future. I think the nuke plants that are at low capacity go right up to high. That doesn't cost much. Just costs money for the fuel. Natural gas plants, they can increase. Sure, there's some out there, but you're not going to build a gas plant and put it online real quick. So yeah, gas plants could be cheaper. They all watch this number. That means the home heating bill is going to be a little bit higher, not much higher than last year. The metals, of course, I got to spell silver right, but still above 2,600 gold. That's a big deal. Copper, quietly, with China running. Remember, it was like 4, now it's at 450, so you jumped up 10%. Orange juice, man, this is a nice trend for orange juice. How high will it go? Well, the whole thing about anything is that once you get a commodity keeps on going up, people are going to start planting more orange juice and orange trees and everything else, and it's going to be going back down. But it's right now pretty high. And Saudi Arabian oil, holy smokes, they told everybody it's going to go down to $50 oil. And, Iran's doing 4 million barrels a day. Could you imagine if Israel hits the Iranian oil fields? That's a lot of barrels. U.S. does 13 and Saudis do about 9. Whew, we could be paying $10 gas if that is hit. But that would cripple Iran. It would destroy Iran's money. You don't have the oil. What are you going to do? Nothing. I mean, that is 90% of their revenue coming in. Yeah, they got some stuff, with other stuff, but geez, oil is it. That's what, if you want to punish Iran, that's how you would do it. But, nobody knows a response. Maybe they don't do a response. Everybody's wondering. And could the oil thing be in there a leverage by Saudi Arabia to pressure, Iran? Just, maybe tone the rhetoric down? Israel to tone the rhetoric down? I don't know. But we look at it, we've jumped up. Remember, we were on here at the bottom, and now we've done a little bit of increase from almost hitting $60. So when you go up to 74, you've done 20% jump, and that's a big jump. Let's take a look at our quarter. We got to compare ourselves to the S&P 500. We are 8% nearly, 7.8% above that average. This is a dysfunctional market because if you go in and you look at the stocks, let's say we have 40 stocks, it isn't all of them average 21%. I put down each of the performances of the stocks, and you can see, okay, Lockheed Martin, oh boy, an industrial jumped 30%. That's huge. Coca-Cola, 19%. But some of these other ones, like we sold ELF this week. We took our loss. We didn't even get this build past our starter position. I usually do a third, a tenth, or some number. Heck, we added, I think, maybe once during ELF's whole time we had it, and it just, Alta is just killed ELF. Everybody thinks that's in there. One of the things we can do, we can take the short-term capital gains loss and then buy it back, because I think it's cheap. Buy it back before earnings. We can't be in there after the earnings, because it's going to have a great earnings quarter. Will it keep on going up? I don't know. Alta is just, that big company is just killing the market for that area. Social media stocks, look at these things. It's all over. Now, we sold Snap. We took our little loss. We didn't even build a 10% position. And we did at 10%. We didn't get any higher. And just didn't go. And I think Snap is another one I like because I think the revenue growth is there. But look at these. I mean, you can see what is above 21%. Walmart, Lockheed, Amazon barely, Meta, TKO. These are the stocks that are making the difference. It's not all tech. We get into the social media stocks. Oh, God, Meta is just a monster unto itself. There's your next $3 trillion company. Apple and NVDA and Microsoft. There's your another company that's going to hit $3 trillion. I mean, this thing is on fire. Their AI is good. Google, struggling to be above the average, just at the average. And again, Snap we got rid of. Did I have Snap down twice? I probably did. TKO, yeah. Oh, I see what I did. I put social media twice. China, look at this. And this is just, as of October, September 30th. You know, the China fund up 25% since we've had it. That's pretty monstrous this year. Year to date, remember. Our small cap indicator, not at the level of the S&P. Look at our techs. Oh my God, this is just a juggernaut. So, you know, these hedge funds, 95% don't beat the S&P on average. And if you're in the fourth quarter trying to show you funded, you got to bet on NVDA and other stocks to do better. This is why they don't do it. That's why people say, well, I'll just go buy the index fund because that beats 95% of the managers. And it does. But we can beat all the fund managers and everything else. ARM, 91%. Remember when they were thinking, oh my God, in August it's a dog coming? No, the revenues are there. The revenues are there. It is in the chips for Blackwell. It's in the chips for the Grace Hopper. It is a key one. Taiwan Semiconductor makes these chips. That's why all three of them beat it. This demand is insane. These three companies will always do well. Intel, we just nibbled at it. You know, there's going to be demand. Intel does make a good chip. Just don't have the fab to make it and put it out. Siri, we're holding on to it. We're probably going to sell out the loss on it. We still got to go through it. But that's, one of those things. We got a 10% position on it. We took a small hit. So, way kind of like almost a 2% loss. But Baidu, oh my God, this thing's like another China. Like I said, buy everything in China, Software, Microsoft, below the average. All our industrials and financials, JP Morgan, just a little bit above. Utility stocks all over the board now. Constellation Energy, we've lost a little since we bought it. Big over the year, about 60-70% up, but NextEra 39%. And then, what you're noticing is all these sectors are doing pretty double-digit growth. Transports are doing good. We get into APG. Look at this, biotech. Holy smokes. And then, other ones are doing except for Pfizer. Pfizer's been a dog, and it's been slow, and it's got till the end of the month to get in the green. And energy ones, COPD and Exxon to me are the same, but Exxon's better managed, and guess what? It's up pretty good. But these guys are making billions a month. That's why I said you always want to be in this diversified portfolio. And again, material stocks. Again, we know with the Constellation making the deal with Microsoft for 20 years, we know uranium is going to be big, and URA is the uranium companies, and we bought Constellation, so it's going to go better over the next few months. And then building, Vertex is our favorite for our AI data centers for ventilation. But these are, companies that people just kind of like don't pay attention to. So great quarter, great year. Remember, this is year-to-date number. That's all I care about. I can do quarter to quarter. That doesn't matter. It's what we did compared to everybody else at the beginning of the year, because we're always benchmarking against the S&P 500. The revenues in Nike, oh my God, it fell 10%. That's a dog. And it looks like a dog. Look at this downward slope. Yeah, we got a new CEO, and they're going to postpone next Investor Day, but Hoka, which is Deckers Outdoors, and other companies, they're eating Nike's lunch. They're still number one. You got a king, but it's a weak king, and it could be knocked out. Under Armour, not even selling stuff. You just go to the gym and look at the shoes that people buy, and it ain't Nike and it ain't Under Armour. And there's some Nike. Don't get me. I see a lot more Converse now than Nike. So these are things that people are looking at. I like, Skechers. I like other ones too. Unemployment rate going down from 4.2 to 4.1 is nice because the feds have been worried about it. Again, the COVID spike is out there, but look at this. I mean, if we were in, the bad times of, 10% unemployment, that's pretty low. So we're pretty good, 4.1. Historically, I always thought 5 was always good, but we showed we can get lower than that. RIVN, we bought this week. They missed the production quota. Okay, so, we look at the 200-day moving average. You can see this thing was way, way up there. And I like the RIVN truck. I mean, I think it's nice. I see it. People are liking their truck. They missed components, which I thought the supply chain. They're like the only one of all the manufacturers that missed the components issue. So why is that bad? Well, there's something wrong. Is it their ordering, or the manufacturer went out like Ford did? In Japan, the manufacturer had a fire and couldn't make the parts. I don't know. Rivian's going to have the earnings coming up pretty fast, and we'll find out more. But I think, buying it before earnings. I mean, this thing, $150 stock, and I think it's a good product. They got to deal with Amazon. This is when Volkswagen announced, man, it jumped up a lot. It will get back up there because Volkswagen didn't pull out of it, Rivian. And and I think it's good. So we'll see. We'll see how it goes. Still got to make a money, and that's why we're taking a look at it again. Start out with a 10% position, and then work up every month and add up to the next 10 months. If it's good, then we'll be in it. If it keeps on going down, we're not adding to it. You know, don't need to add to the misery, as I call it. Social media, we're going to focus on this week. We have 3 social media stocks. This is a category I made up because I was so tired of the 1970 11 sectors. It doesn't make sense. Social media is unto itself. You know, how you interact with people, and you know, and the king is Meta for their earnings. I mean, look at this. If you go out here and we go find our January number here, you bought it at 350. It's at 600. You bought it when we bought it around about 100 something. You know, you've made up 6 times your money almost. You know, when companies are making billions of dollars and they're selling at pennies, you got to buy them. So, you know, like I said, let's take a look at Google's #1. YouTube is hot. It monetizes. You know, there's very few social media sites that are giving you money for posting and content. And YouTube is one of them. Twitter/X is another one, but it's a different thing. These content creators tell me, you know, like comedians, like I'm a medium level comedian. That means I'm not like on the Tonight Show every year and everything else. And I can make, you know, $80,000, $100,000 off my weekly videos that I do. And that's where people are going to. You know, yeah, TikTok's nice, but they're not giving you the big check. And this is where you're going to see people are monetizing it. It's great for, you know, Google/YouTube because you can sit there and know how many people watch that video. So the advertiser gets real numbers. How many minutes did they watch that video and go through your ads? So it's going to get better with AI because as it starts to pick up, oh, he likes this, you know, drama series, and let's put other ones up there. Or he likes this music, so let's put bands that are similar to this. That's what you're going to get with better AI, and Google is, you know, got it. I don't think the Google Gemini is up there yet. You know, it's second tier compared to Meta and OpenAI. TKO, you know, that's the wrestling. That's, you know, UFC. Stock has done well after going through it. You know, it's starting to get a nice slope up here for the 200-day moving average. That's what I like to see, a nice steady incline, not a rocket up like you saw the China funds. This is good because I think they're going to grow well. They pack the place. If they get a little bit more organized and not, you know, realize that, you know, the pay-per-view is important, but live venues is important also. You know, they want to always monetize every month a live show, and that's what they have to do if they're going to be organized. Every month you have a pay-per-view, ESPN Plus contracts coming up, and if it comes out the way I think it is, it's going to jump because they're going to pay more for UFC. They have to because it's hot. You know, when you sell out arenas and people went out to the Sphere and did well, you've got a hell of a loyal base. And that's a base you want to tap into for viewership because they buy products. You know, these are, you know, fighters. They're like, you know, I don't want to say you and me, but they're fighters that came from the backgrounds of an average person to everything else. So, heat index. This is what I like to see at the end of the week. Isn't it nice to see all this big green, especially the ones we own, like Amazon, Meta, and Google, and NVDA. Wow, you know, that's always nice. JP Morgan. So ExxonMobil, you know, pretty diverse rally. The only thing kind of down was a little bit on healthcare because some rumor that, you know, Ozempic and all these other GLP-1 drugs are slowing down versus, you know, being at a 30-40% rise. So we'll see. You know, it's just a rumor and people get nervous. But, you know, if you tank Lilly down to the, you know, 600s, I'm going to be buying it. I don't think it'll happen. But healthcare, you know, always a tough area. But, you know, this is what a pretty good week. You know, we had a good week. Look at our Walmart here, too. So I think, I know it's a long time, but we had to cover the summary. So we had a great quarter. Let's not, you know, forget that. We want to celebrate that. We should, at the end of the year, have a great year. A great year, to me, is 16%. That means we double the industry average on average. But, again, we're benchmarking against the S&P, and we'll go where the S&P. I think October is going to be ugly. We had a good September, surprisingly, which is normally last 5 September has been ugly. That means, to me, I think the October is going to be ugly. It's just my thinking. And then once election, you know, ever since Eons and super performance stocks by Mr. Love, You know, the election year is the year you want to be fully invested in it if you're going to go in there. You know, if you're going to stick to some ratio in there, put more into the stocks. Go a little bit less on it because it's got a great track record. Other than that, take it easy, be safe, and I'll see you next week.